Hi everyone, welcome to Ashish Kyal Trading Gurukul. It's always lovely to see the mentees here and great to interact with you all. This is a revision session, much needed, I suppose. I'll be a little low on energy right now, given the fact that I just had a root canal today. I'm now not keeping that well. I'm still not eaten anything since morning, and I can't really speak articulate very well because I'm struggling because of the anesthesia. I'm still not able to speak very well. But since we had the schedule and everything was done, so I thought I can't cancel it because many of you might have planned out accordingly. So I am here in front of you. I'm doing very well. It's just the uh, it's just the impact of the anesthesia that I'm not able to speak very clearly. So very interesting market scenarios. I thought why not to have the session and discuss about it. Uh, we might keep it a little, the duration might be a little less depending on how I am able to perform. Uh, but it is absolutely fine. So chalte hai, market is at a very interesting juncture. You can see a very sharp correction on the downside. We can see a very sharp fall just yesterday, more than 500 points, 600 points, nearly 600 points at one point of time, recovering back sharply by nearly around 300 points, I think, in the morning, and then again trying to stabilize somewhere around that. So I had an interview today on CNBC TV 18 where I said that 17,000 is going to be important, and it looks like it should not cross it. So that's why we talked about that, why this is just a pullback, and the mentees who are from the March 2020 batch, they might be seeing this very similar kind of movement happening that we saw in the March 2020 period. Nilesh is here from that mentorship batch, and it's very interesting, right? You are seeing a very similar kind of a movement happening. I'm marking the chat to everyone so that everyone can see what you are typing, or everyone is in sync together. And it's great to see all of you here at one place. So let's move on further. Let's not spend much time. You can post your Q&As. This is more like a Q&A session, or things that you want me to address. You can post it across in your in the Q&A box. And also, what I would like you to do is to keep the questions ready, whatever questions you might have from the option trading program that we had with respect to options, with respect to wave theory, with respect to anything. So it is always important that we have this kind of revision session so that you are in touch with the foundation that we have laid during the mentorship period. We also have option participants here. They might, because I thought they might also have questions, so we invited them as well from the OTTA program, and that's how it is. So let me just open up the chart first, and then we can, and I'll parallelly take the questions also. Let me just shift back to the chart. Uh, I'm going to delete out this specific indicator here. Okay. Uh, Over here, what we can clearly see, if we are looking at a monthly chart, when I was speaking on CNBC today morning, I clearly explained them that when you are looking at the monthly chart, you can see the first time in November, prices managed to close below the prior month's low after nearly around 17 to 18 months. So that suggested that something has happened and something is changing for sure. If you look at the weekly chart, you can clearly see we have a bearish week, and so far, I mean, this was an outside candle, and so far, so the low of this candle is at 17,000, sorry, 16,966. So if we manage to close below that in the coming week by Friday, not the coming week, in this week by Friday, it will indicate that the overall trend continues to be on the downside. That's on the weekly time frame. And on the daily time frame, if you are looking at the overall movement, you can clearly see very decisively the price have been breaking below the prior day's low, closed decisively, a huge move down, gap down, an attempt to recover, but formed a doji candle today without any meaningful uh, retracement. So it just attempted, try to fill the gap, and it's just at 16,770. So nothing happened much, right? Despite, so in the morning when it was up by 300 points, many people would have started thinking, okay, the low is formed, now let's buy. The simple point is, did it even close above the prior day high? Forget about the week. If you look at that, it did not even manage to close above the prior day high. That's the thing. So that is a very simple and very effective way of knowing what is the market trend. And do not get carried away by looking at the candle. So I have been tweeting that also very, very well, that खाली candle का size देख के ये नहीं decide करना है, अरे it's going to, just because it closed near the high point of the day or low point of the day by rallying 300 points or falling by 300 points should not be the reason for you to buy or sell anything. That is a blunder that many people do, that they buy and sell just because there is a huge move either up or down. That way you will be trapped. Yesterday Nifty went down sharply, and we can clearly see after the move on the downside, the RSI were oversold. So I even mentioned that we are having a reading of nearly 17 or 18 on an hourly chart on the RSI. Let me put that also here, and that indicated that we should have a pause, if not a pullback. That is one way of start reading RSI, because many people look at RSI as a trading indication. No, I look at it just that when we should avoid it. And you can clearly see that this, at this point, at this juncture, when it was falling, the RSI reading on the downside was nearly 18, 17.5 to 18. That clearly suggested that that's not the time to sell, despite of the euphoria, despite of whatever panic, not euphoria, panic, that many were expecting. Post that, today we witnessed a gap up opening. If you are a positional trader, I would tell you that you need a pattern. Just because we have a gap up opening, we took out prior day's high, or we took out the day's low here, should not be the reason for you to simply go and buy and sell. Okay, that's very important. Is you also have to find out, is it happening from the area of significance? So if you have gone through our Master of Technical Analysis program, not OTTA, MOTA, I've talked that very clearly that it has to happen from the area of significance. So this movement that you saw, is it happening from the area of significance? If yes, and do you have a target? Do you have a stop loss? Do you have a plan? Then you need to go and take the trade. Many people, what they do is they simply jump by looking at a gap up, by they simply jump by looking at the low gets broken. All of those things should not be the reason. There has to be more precise reason, either a pattern or a time cycle or the full moon. Okay, there has to be more reasons for you to enter the market. For exit, we already have planned it very, very prudently when we in the mentorship program of using super trend and ATR, and then combining those together to form an exit strategy. So area of significance can be, yes, Nilesh, it can be the center of the Bollinger Bands. That can be one of the reasons. That is very important. Also, it can be an Ichimoku cloud resistance on a 15 or an hourly chart that you are looking at it, or it can be a Fibo retracement. So there are various ways in which you can look at it. I'm not looking at this move as an impulsive move for sure. This is a mono wave. You call it impulse or corrective. It's a single wave from one point till this point. It's a single wave. So it can be impulse. Who knows that? Super trend settings, we have discussed that, right? It seems to have retraced 61.8% of the current fall and a little over 38.2% of the entire fall. That is how we can see this entire move happening. The way you can see the wave count is we have to go on a 15-minute chart now. I'm going to hide across the Bollinger Bands. And when I'm looking at this specific chart, from the wave perspective, the way I am seeing it is this entire move which started at this point onwards. This is the point from where this fall started. We completed wave A here. Okay. We completed wave B here. This was again an A, B, C, wave D somewhere around here maybe. And this was E. Once that was complete, we got a break here. So this was the area which was a classic opportunity to short and continue to ride. Now short can be in the form of two ways. Either you short futures or you buy puts or you sell calls. I preferred shorting calls because there were more than one possibility that could have opened up. So I preferred shorting calls and it worked out well for me. Despite of these, because I'm more like a trend following and positional trader. Despite of the entire fall, if you would have been even long on the side of puts, you might not be able to make money because you might have shorted around this zone. After shorting around this zone, when we are around this level, your stops would have been definitely triggered. So you might have made a little money or you might not have made anything because the put value would have deteriorated given the spike up in IVs and then cool down in the implied wall that we discussed in OTTA. So selling call options look more prudent and I'm still riding on those because nothing happened. And after 2 days, it's going to expire. So that looks like a good strategy as of now. Now, what to do next from here on? We know after this entire move could have been completed after ABC, we might have started a bigger C leg. Within this C leg, we might have completed this A leg over here. And this can be a B wave, which is currently ongoing. Now, we do not know whether this B wave is going to form a zigzag pattern or a flat pattern or some pattern, but we need a pattern. If you do not have a pattern, you can, I at least cannot trade. I need some information from the market, whether it's going to form a pattern. Okay. Uh, this C lag overlap with wave A, is it okay to see a diametric? Yes, absolutely. So there is no such thing. In sideways diametric, you will see overlaps. And it's ideal to see overlap happening because that is how it will be. But the C is anyways not complete. C is still ongoing. So we are in wave B now. Now the key is to understand the pattern which is forming in this wave B, which will give us an entry for the C to ride. Okay. Within this wave C which is going on, we have a B going on. Within this B, now I'm drilling down to a very minute count. We completed A today. Okay. We are in wave B of a B. That's what it's forming right now. And it's on a very small term. We might want to go on a 5-minute chart to check that internal counts. But if I do that, the counts will go away. So let's just stick with it. And now we need to see maybe a pullback in the form of wave C, which will complete this wave B. Okay, so I'm just going to rub it across. We need a pullback in the form of C. Then we will complete this P. Then we will start a downtrend, which will be in the form of C of a C wave. I mean, wave enthusiast, are you getting it? People who might not have any clue about wave theory might be largely confused and thinking ki ye kya ho kya raha hai. Is it a cup and handle pattern? No, not right now. This is not cup and handle pattern that we are seeing here. So do not worry if you don't know the wave count. So this is what I'm seeing the wave right now. Wave B of B might continue for a day. It might continue for 2 days. We don't know that because we know the A is complete for sure. We know B is ongoing also as of now, but we do not know how much time this B will take. If it takes more time than A, then we know it's going to form a zigzag in the C leg. If it takes lesser time, then we know it's going to form a diametric. So we do not know how much more time B will take. That's the problem. We do know it should not take, if wave A has taken say 2 days, then wave B should not take more than 6 days, not more than 3 times of wave A. That is what we know. Also, at the same time, we have a cycle which was formed a low at 17,600, which is a 55-day cycle. Now that cycle low is broken. Okay, which means that if you have questions, please post it in the Q&A. I might miss out on the chat box, So post it across on the Q&A. So cycle low being broken indicates that the top which is formed post the cycle low, which is at 17600, should not be taken out. Okay, so that is important. And that low is, oh, I'm so sorry. I think since a week I am been stuck with 17,600. It has to be, the low formed here is 16,000. Let's go on the daily chart. 16,900 was the low of cycle, not this one, but we formed a low a little later on a 55-day cycle, which is 16,900, which is this one, 16,890, yeah, to be precise. That's the low which we have. As you can see, I'm little in a dream mode given the effect of anesthesia, so I'm struggling across with levels which I know by heart by for sure. Okay, let's go on the daily chart and make it, simplify it for everyone. So not everyone is wave enthusiast, so they might be getting confused. The low formed on a 55-day cycle was 16,900, which is this specific low. And post that we had a pullback of 1, 2, 3, 4, 5, 6, 7, 8 days. That's fair enough. So which means now for next 45 days, so we have 10 days done. Next 45 days, ideally, that's an ideal case scenario I'm saying, we should not break above this high. That's an ideal case scenario. Let's put an FLD. Anyone tried with an FLD? Guys from the MOC, let's put an FLD here. Okay, an FLD of 29 period. And we will get the target basis of the FLD because the 55-day cycle low is broken now. And the period will be 29 for an FLD. Now, if we have to see where did it cut off, from which level. So from this point onwards, we can see a cut in the FLD, and the high was 18,600. The cut happened at 17,770. So approximately 900 points, a little lesser than 830 points or 830. So 830 points, I think, and 900 if we project from 17,770, we get 16,870. That target is anyways done. It's a 29-day FLD because period by 2 plus 1. So अगर आपने period 55-day cycle का लिया, divide by 2 plus 1, you get 29. Let's put one more FLD, which is a bigger cycle FLD, which is a 110-day cycle ka FLD. So 110-day cycle ka FLD will be what? 55, 110 by 2 is 55 plus 1, which is 56, right? So let's put 56 also and check. So we have a 56 period, and I'm going to change the color so that it's different. Now that's very, very interesting. The FLD, one of the earlier one I had put gives me 16,344 target. I'm not sure. Rimple, just check that once again. The target is done as per the earlier FLD. The next FLD, which is future line of demarcation, is already cut here. Iska target kya aata hai? Let's just check that. So we have a top here which is 18,600, and the cut of this FLD is for sure happened at 17,200. So we have a cut from 16,008. Can someone do the math, please? 18,600, and the cut is happening at 17,200. So we have a 1,400 points fall. In this 1,400 from 17,200 gives us a target of how much? 15,800. That's the target that we are getting basis of the next FLD. Now this 15,800 is also the area where we have some consolidation that has taken place here around this zone. Okay, so that is very, very important zone, and that's the target we are getting. So 15,800 is also the area where FLDs have gone sideways. So this is purely from the time cycle perspective. We discussed from the wave perspective. Now we are discussing from time perspective. So this target is 15,800, which is also the target of my wave D. Absolutely, Nilesh. So we have an A here, we have a B here, we have a C completed here. We have this wave D, which will overlap, come down here, and then we might have wave E going up all the way, and then the bigger pattern tops out. That's how I am looking at this entire story. Now, since we have a bigger target of 15,800 derived basis of the FLD, we clearly know the intersection area and we can write that trend. Now let's see how to write this trend. Research समझ में आया. We know how it's going on and how to form an option strategy, since we want to conduct options also today as a, if you have questions on that. So how to write this trend now? What I'm going to do is, हमने wave theory समझा, हम ये देखें. Now the most important aspect that I'm going to show you, that you should practice irrespective of whatever techniques you do, is look at channels. That's the most important aspect. Do not think yaar, I am an expert on time, I am an expert on wave theory, so I will be not using channels. Please don't do that blunder. You can't live without a trend line. That's as simple as that. You need to live with the trend line. So this is the trend line, and I'm going to draw a zone here. I'm just going to connect the lows here, and that's the zone. And this is where we are, from where we bounced back over here. So that's the zone. Is it going to break on the downside? We don't know, but this looks appropriate. Let's go on an hourly chart and check. Along with this, I'm also going to put an Ichimoku cloud. So some people think they might get overwhelmed with so many techniques. I'm not asking you to use all of these techniques. I'm just telling you to pick up the ones that works for you. Okay, you can use a simple trend line and channel, build up your entire trading strategy around that. You don't really have to worry on that. So if you go to Ichimoku cloud here, you can clearly see on the daily time frame. Let's do that on the daily time frame first. Let's look at the daily time frame. We can clearly see this is the first time prices have formed a lower high and a lower low below the cloud. There was an attempt to break the Ichimoku cloud at this point of time, but it did not. It just went there. It did not do much. Also, the fall was not that sharp. This fall, not now, about 2 weeks back itself, I said a fall of 400 points that we witnessed here is a sign which I saw only during the period of March correction, which means something is changing. Also, in fact, we looked at the lunar cycle. If you remember, I told that it's post Purnima we have started seeing corrections, which was not the case earlier, which means something is changing. And that was at these levels I'm talking about, not lower. I'm talking about when we were at 18,500, 18,400. So those were some readings. Then I also talked about IRCTC stocks crashing down big time. Those are the darlings of the current market. So when the leaders falter, that's a sign of something is changing. Look at IEX, Indian Energy Exchange. Look at the Paytm IPO. Absolutely, Nilesh. Look at those. And those were the indications something is going wrong somewhere. So even when the index was up, these stocks were correcting. And I have highlighted enough number of times my worry for NBFCs. Looking at India Bulls Housing, looking at LIC Housing, looking at LNTFH, those stocks have just performed miserably. Okay, everyone was gung-ho upon looking at maybe an Axis Bank or an ICICI Bank, but ignoring the fact that even if the banking is doing well, what's wrong with the NBFCs? So NBFCs can't just do. If NBFCs are not doing well, then something is not right in the entire interest-sensitive sector. That's the whole aim. The next thing to think about is what is happening with respect to the inflation. If you look at, everyone is talking about CPI, which is still at 6% or odd around those levels, but no one is talking about uh, the wholesale price index, WPI, which is like 14%. When was the last time you saw a WPI index at 14%? And look at it's at 1991. So Sandeep, yes, absolutely. And then look at what is happening with what happened with Turkey. Their inflation is about 20%, and they have no other way, but they kept a lower interest rate scenario, and the entire currency started collapsing. In the back of a currency collapse with a rising inflation, it's like double-edged sword, because a rising inflation is clearly suggesting that with the currency going down, your imports are going to increase further. So India, if that happens, the import that we are doing, the crude oil is going to become more expensive for us. If that is the case, then you are in real trouble, because then you can't fight currency depreciation and inflation both together. Right now, at least our currency is still under manageable way. So I think the steps that the central government should take is start rising the interest rate. That's the only way they can survive this. But if they continue to be pro growth, look at example of what is Turkey going through now. Now they have nothing left but the sentiments. Unless the sentiments changing, nothing can happen. And over here, I'm not saying rising interest rate is going to be an easy phenomenon to fight with, because when you start doing that, you already have moratorium going on, and with the rising interest rate scenario, it's going to be definitely hurting. So there has to be a solution. I'm sure, I'm not an expert on economics. I don't know how this entire banking system works in totality, but what the charts are suggesting is what I'm telling across. So there has to be some action across the board, aggressive war footing actions that needs to be taken. Unless that happens, the markets are going to, is also suggesting it's not a very promising sign. So let's see what the policymakers make out of it. I hope they are not too late, because they will start taking actions. One Nifty corrects towards that 15,800, another 1,000 points, and then they realize something is wrong with the economy, because ultimately markets are discounting what's going to happen in the economy maybe few days, few weeks, few months down the line. So if markets are discounting that, you need to take steps now and look at the market as a forward looking way mechanism. Okay, so let's see how it happens. For us, we are going to be uh, enjoying the ride. As a trader, as an investor, this is a sign of concern for sure. Shall we book out all our investments in portfolio? That's a very tough call. That's a very personal call, I would say, because I can't advise generic as a blanket approval to sell off everything without even knowing what stocks are there in the portfolio. So it depends on whether you should book profits in your portfolio or not. It's a personal choice. Maybe you can book out 30-40%, stay on the sidelines with cash. In case it comes down, you should have that opportunity to buy again. That's what I think. And I think gold should perform well in 2022. That's what I'm looking at it. With the back of depreciating currency, inflation worldwide, gold always, since ages, gold was looked up as an inflation hedge. I'm not sure why no one is talking about it now. So gold was always an inflation hedge. Maybe people will start talking about gold once it starts rallying again. So that's how it is going to be. The divergence on the RSI, yes, there is a divergence in to some extent on an RSI on the daily time frame. There is some divergence. There is a channel support that is there. That is what we are seeing. From here on, if the channel works well, then I'm not ruling out a possibility that we might start seeing a upside down move, up down move kind of correction back towards that 17,200 level. Because if the channel is working well, this will be a very systematic way of trading the market. And this reminds me of a period which I have talked about very early on, even before this correction started, I've talked about a period on the daily time frame, and I said this is how the correction can turn out to be, which was I think 2012. Let me hide the Ichimoku cloud now. Where is it? Yes. It was much earlier, which is this phase of the market is what we are witnessing. So I've been talking about it for quite some time because this is where the inversion of 85 weeks happened. Are you with me? You might remember that this is the area, and this is how we can behave, and this is where we might have bounced back from at this point of time. So a fall, we had a pullback, we crashed. We might be at this phase of the market, or we might be at this phase of the market. This is how we are behaving. So we'll have a classic opportunities on the short side and intermittent pullbacks that you can see. So this is how I think the movement can happen in an overlapping up down kind of a scenario. And we are all anyways witnessing very similar action to this. So this I've been talking months before, because that's where we had a inversion on the cycle period, not 85 weeks. I think I'm not, what was that cycle that we looked at, which created that inversion? Was it an 85-week cycle? Yes. Okay. So that's what it looks like. Let's come to now the most important aspect. अभी तक हमने overall context की बात की, understanding. Now I am entering into the most important aspect that you need to understand for trading is to time the market to enter the short with the exact level that you should be looking at, or a trade setup. I'm entering into that now. Okay. Let's now start looking at a smaller time frame chart and time the market on an hourly time frame by combining all of these things that we have done so far. Fair enough? Shall we do that?